Hello everyone. Today I was not necessarily going to be posting out some information on this. I actually will admit I did miss it slightly. I really took my eye off the ball on this opportunity, but hey, it happens. I've had a really good week, and I'm really not too worried about chasing pips right now. What we basically had. Sorry, I'm just having a look at a position. Okay, so what we had spent some time looking at is obviously some of you know we analyze oil very closely. I really like to trade it from time to time. And if you want to have a look over here, we've got a video, What Can I Trade, talking about OPEC oil and exactly what sort of we were expecting to happen over the next sort of 4 to 10 weeks. And today was just a great example of it playing out. It's literally let me just have a look at my economic calendar. At about 10 minutes ago, the OPEC crude oil stocks change came out. Sorry, not the OPEC, the EIA crude oil stocks change came out, and we're down to 8.945 million barrels in a negative, which is incredibly good for prices. And obviously, it's right now what I'm doing is sort of putting in a speculative position. I'm really not too worried about if I lose the position or not, or depending on how it goes. But I want to analyze and watch it very closely. Unfortunately, I got a terrible order fill. Really, really, really bad order fill, but just going to play with this position as I go. I didn't get this on my institutional account. I might actually jump in on it on the institutional, but on my retail account, I basically entered a pending order, and I got filled on the spike. So there was a massive spike that came out, got filled way above where my entry was, and unfortunately now I'm sitting with a position that's in a slight loss. Not too worried about it. I've set my stops, so whatever happens happens, but I'm not too sure. I don't think it's going to hit my stop. Obviously, I hope it's not going to, but if it does, I might look at re-entering or trying out my institutional account and giving it a stab. But basically, if we have a look here, you can see that we've basically got the FAMC minutes coming up in 3 hours time, which I'm going to be interested to have a listen on. But you can see we're down to 8.945 million barrels. Previous consensus was 2.72, which we found was a lot less than we had expected. Obviously, with what OPEC is doing right now, they're really shifting for price cuts. They really are, sorry, not for price cuts, production cuts. And obviously, everything that's happened in Venezuela right now with Maduro basically causing major issues, they are discussing very heavily to put on major oil sanctions and also sanctions on some of the people inside their government. And obviously, because Venezuela is so dependent on oil, they know that it will be a big stab at them. And also because Venezuela's largest oil producer is actually a government parastatal as well. So the government makes a massive amount of profit off of selling oil. If you didn't know, Russia scooped up majority of their oil in an oil deal, and I'm not going to go into too much information about it right now, but there was a big speculation on that. There's obviously more information coming out. Another one coming up was obviously in terms of what OPEC is doing. OPEC sort of put out some information saying they're going to do another big push for production cuts, and they really want to try and see if they'll be able to extend production cuts. But obviously, something that caused a little bit of unrest in the market over the past week to 2 weeks is a lot of companies have come out with their 2018 forecasts in terms of demand. So they're obviously firstly having a look at what the demand is going to be. Are we going to be seeing an increase in consumption over the 2018 period, and what sort of numbers are we looking at across the US as well as across other parts of the global region? One thing you are noticing is, as an example, even things as sensitive as stuff like they were talking about the 500,000 Tesla Model 3s that have been ordered from Tesla. Tesla basically has issued out bonds to the market to help raise funds to help them actually produce these cars a lot faster. So the wait for these 500,000 Tesla models is going to come a lot sooner. what they have also understood is that depending on what time those Teslas get on the road and what time they go into full swing of use, you are going to see, I'm actually just quickly going to throw up the position so we can watch it. You are going to see very closely that people are going to be moving a lot to Tesla, and those 500,000 cars are not going to be consuming fuel or gasoline, as they call it in the US. That is going to cut down demand a huge amount, especially during the summer period, and obviously putting out a lot of other things in the market right now. They're not necessarily sure if there's going to be too much of a demand. They think there might be a slump in demand in 2018, especially because of the IPO for Saudi Aramco. Now, the IPO for Saudi Aramco is going to be interesting because obviously Saudi Aramco is used as pretty much a massive war hammer to attack the US and go for them from time to time in terms of pushing oil prices where they don't want them to go. Obviously, what Trump's rhetoric is, he wants oil to be cheap, he wants gas to be cheap, and he wants to focus on making sure it stays that way and it doesn't go any different. But obviously, in terms of what we're currently looking at, let me just actually put out that's just the open candle. So I'm just watching if it's going to pierce below the open candle. It's sort of on a spinning top right now. So in terms of what Saudi Aramco's IPO is going to do is it's going to push them to want to sort of move towards being more diplomatic with their moves. Obviously, they're going to have big shareholders. They're going to be a public company. And the IPO, don't quote me on this, but I think it's about $1 trillion IPO from what I understand. It's going to be big. So obviously 2018 is going to be massive because if Saudi Aramco steps down from sort of meddling in oil prices and what they're currently doing, obviously this is speculative comments, so don't quote me on this, but from what I understand, I feel if Saudi Aramco IPOs strongly and they try to take a more diplomatic stand on oil in the Saudi region, you're going to see America take control of the oil price a lot better. And obviously if demand goes down, and if America has the choice to keep oil cheap, you're going to see that happening. So what you're basically seeing now is OPEC is making a desperate attempt to cut oil production. And they've been questioned a huge amount because obviously the oil production cuts that were made in July, where they basically said that they want to extend the production cuts into March of 2018. The thing is that the IPO for Saudi Aramco will be in April 2018. So obviously that's going to cause massive volatility in the markets. So March, April, May, I'm probably only going to be trading oil because it's going to be a massive, massive quarter for trading oil. And these are the really important things you need to understand. And this is what I've been analyzing. So what I'm basically seeing now is, in terms of the numbers, OPEC has really hit the nail on the head with this month. Even going out of summer in the US, you're going to have people driving a lot less. You're going to have a lot less commuters. And with them going into winter, obviously you're going to see things changing on that side. On other aspects as well, you're obviously going to see OPEC is going to catch their stride. Starting off in July, they really struggled to look at what they were doing with the oil prices, and now they seem like, I'm not obviously sure of it yet, but they do seem like they might be knowing what they're doing. As an example, I have traded many EIA crude oil stocks change, where, as an example, a number like this has come out, where we're down 8 million barrels, and I swear to you, the price will still drop. As an example, if I go back here to the weekly, you can see here, this is some of the information I've analyzed. As an example, in this area here, I was trading within this range, and I basically went long in a position over here, and I went long in a position, held it up to the top, added to the position, lost basically all of my profit, went into a major loss, closed out, well, not a major loss, but from what I lost, I wasn't too happy, closed out the position, went short and held it back down. I closed out my position halfway. I thought it was going to test on this neckline. I should have held it out longer on the weekly. But in terms of what I'm looking at right now, you can see OPEC, sorry, not OPEC, Brent crude has had a 3-week sell-off, and it's moving into the lows, and I feel that pushing back into that 54 $55 region is going to be where the market wants to move. The market is not going to pierce below this $50 region. $50, it's a whole number resistance level. It's a price level that oil is going to struggle to get through. As you know, US crude is testing that $50 region. So US crude is trying to break above 50, and Brent crude is struggling to break below 50. So that is a pretty interesting correlation. Obviously, if we see US crude break through, we obviously know there's going to be a strong bounce of 50 for Brent crude, and Brent crude is going to be a strong opportunity to go long in. But obviously, these numbers, what I'm basically looking at is, obviously the market's going to digest it. I've had a horrible entry point on this position, which I'm not too worried about. Still in a little bit of a loss, but basically what I'm having a look at, sorry, I'm just also keeping an eye on, keeping a very close eye on Bloomberg as well to see if they've got any news coming out. But basically, I feel that OPEC might be catching the stride, and a lot of people maybe will be wanting to put a little bit more confidence into OPEC and into oil this week. In terms of the numbers that have come out, these numbers are really, really low, and that is something we also need to take in. Is a number as low as 8.945 million is down to these lower spikes here. Oil is really in that region, and I feel that the problem is last week's number coming out at 6.45 was a good number, and this week it's even better. So perhaps what you're going to see is this will be almost like a confirmation that you're going to see prices will rise and production will drop. And obviously going into next week, if we do have another bad number, or should I say good number, if we have another very low number in the negative sort of 8 million to 10 million barrel region, then we're going to see something really amazing. If we pierce into the negative 10 million barrel region, that's going to be last time we did that was back in 2016 in August, nearly 12 months ago. And before that, it was in 2013 that oil pierced below that level. So going into that sort of 10 million barrel region is going to be almost like a historic moment for the fundamentals. The fundamentals are going to be very strong. It's going to be really good to be able to capitalize on an opportunity like that. So this is a very strong fundamental position, and that's almost what I need you to understand is that, in terms of what we've analyzed, please make sure to actually go have a look at this thing. Let me just have a look. Okay, so yeah. Make sure to also download our trading plan for July week 4. This was posted out in July, and then you'll actually be able to understand why we are talking about that. But basically what I need you to do is have a look at that plan as well, so you at least know what we're really talking about in terms of oil, because I really do feel that this number is going to be a strong confirmation. Look, in terms of me recommending this, I'm not obviously going to recommend you trade this. For all, I'd say, when people say to me, I've got some money left over, should I trade it? I say, no, you should go spend it on a nice holiday and enjoy your time, because trading it, you're probably going to lose the money. But what I'm basically trying to say is that in terms of these numbers, you really need to digest this information as pertinent and strong information for this number. This number is low, and if we are able to pierce into that negative 10 million barrel region, it's going to be an even better confirmation. And I'm not going to repeat myself, because there is a huge amount of stuff that we put in the July trading plan that will confirm what I'm talking about. And there's even, it's all of the research. So it's research going back to every single article I read and why I derived the result from that. And, that's when I called oil at, $47 a barrel, and I managed to make the biggest trade of the year off of that trading plan, that single trading plan. You know, I alerted it Sunday, Monday morning I was in the market, Wednesday afternoon I was out, and by Friday I was out of the rest of my positions, and I got it right. And I'm not always going to get it right, but what I'm saying about this number is we analyzed the outcome based on what we saw, and what I can see happening again is that the same result seems to be coming out. So basically, if we just have a look at the order fill, you can basically see on the hourly candles. So what I've basically done here is I've just put a horizontal line because this is obviously a period separator. So the candle opened this morning higher than the previous close. So obviously the previous candle was a bullish candle, very strong candle, and the next candle open above went slightly bearish. So obviously that's where my open is going to be for the day. So now I know where my open is. Obviously, if this candle goes below, goes bearish, and stays bearish, I know I'm probably going to have a stop loss hit, and I know that people aren't ready to take in this number yet. So obviously that's what you're going to see. You're either going to see the market begin to want to spike, or the market's going to reject this number, move back to this area. It's going to take my trade out, and it's basically going to land up doing that. And the biggest reason why I'm putting my stop loss here is because here is where the previous candle opened for yesterday. So this is yesterday's opening candle. This is the bottom of the body. I don't feel that we'll get a test back down to here if the number is accepted. If the number is rejected, I think that's exactly where we're going to go. So obviously, if we go to that number, I'll be stopped out, but I'll probably have pending orders waiting, because I feel that that is a very strong rejection level. The body of the previous bullish candle could be a very strong rejection level. I don't think it's going to move all the way down to this wick. I feel we'll get rejection off of the body of the previous day's open. So obviously, if price moves down to that region, I will have a loss. I'll probably, on my retail account, I'll be down about maybe 0.3%, but today I'm already up 0.7%, so I'm pretty happy on the day, and I've got some other positions that are doing relatively well. So I'm pretty much putting in a speculative trade. What actually happened was, okay, I put in a pending order around about here, and I'm actually going to have a chat with my broker, because obviously this there was a bit of slippage or something like that, but I basically had my pending order opened right over here, and the market spiked. I was actually on the 5-minute chart. You can see we're going into back down into that oversold region here on my technicals. So I think we might have a strong push up to the top. But basically what I did is I entered a pending order around about over here, I think. You know, we had the market coming into this region here. This was basically the last candle. This was the open of the news candle. So I had an order over here. Unfortunately, the market spiked and I got filled way high. So you know, that tends to happen. Sometimes I can catch a strong order fill, sometimes I can't. So it just depends. With my institutional brokers, sometimes I can get a very strong order fill. You know, I can get an order fill on the spike. So it just depends. You know, it's a bit of a luck game in terms of trying to get your order fill. But you know, if I get confirmation that market has accepted this price, I think in terms of my hourly candle, that's pretty much what I'm going to look at as price acceptance. So obviously, when I mean price rejection is going to be this lower level here. So the previous body's close. You can see now we're seeing a slight push up to the top. So obviously, in terms of price rejection levels, I'm obviously looking at the previous body's close, which I'll show you over here, to be price rejection level. So obviously 2 days ago we had the bullish candle close, a bearish candle close. I've put my stop loss below there. I feel price rejection could go into that region if this number has not been digested. If we do see price acceptance, I feel that we're going to see a strong spike above this 13 EMA. So obviously you can see here there's a 13 EMA. Some people believe that I should be using this, some believe I don't. What I can say is I do well using it. So if I see a good close of this candle, So basically, if I see the candle close nice and strong, and it also has a nice wick to the upside, so it has a little bit of a wick to the upside, and I see the next candle, so tomorrow's candle, if I see that open above the close of today's candle, I will probably add to my position on my retail accounts. On my institutional portfolio, I might stay out of this completely. If there is price rejection though, I might enter. So that's pretty much what I'm trying to show you here. Is I'm showing you the dynamics of, you need to understand where the market is going to reject its price, because news has come out, the market's digesting it, and they're sort of trying to say, okay, where are we going with this number? Because obviously there were a lot of people that went short this number. There was a really, really, really rough article that came out basically saying that OPEC is useless, that they really don't know what they're talking about. And I really think that that damaged their integrity in terms of what they're trying to do. But in terms of what they have produced now, it's a strong number. And obviously, you're going to see a lot of the institutional guys, they're going to wait for the dust to settle, and then they're going to enter their big orders. And they're going to really hold this because they really want to see price. They want to see production spike below $10 million barrels. That is where they're waiting. That's the number that they're looking for. So, the previous number coming out 6.45, now the number 8.94. Below, if we hit a 10 million barrel deficit in production, I can probably confirm that is the number that institutional guys are looking for. That is the number that they're waiting for to say, okay, OPEC knows what they're doing, and going into March, we're probably going to see either an extension of price cuts, or we're going to see the maintenance of price cuts. So we might try and stay below 5 million barrels and to the range of below 10 million barrels. And that's probably going to stick. And I think in terms of the economic instability in the US against North Korea, and also obviously the US poking at Venezuela, poking at a few other things right now, the integrity of their currency is on a bit of a spinning top. I have also posted out information talking about is the US dollar weakening, which you can have a look at that as well. But what I do see is that a lot of people are moving over to commodities. You're seeing gold had a massive run last week because of North Korea basically saying they're going to, strike the island of Guam, and they're going to really take on the US. This week, they're basically saying they're considering it. It's a part of their plan, but they're not going to do it. And I think they really stepped down because they know what's going to be coming if they land up causing problems. The US has basically said you shoot anything in the direction of Guam, that is called war. And they know that when the sanctions seriously start to kick in, there is going to be a humanitarian crisis in North Korea. So people were moving a lot towards things like commodities like oil and gold. So you're going to see a lot of people try and move their money over to there. And if we have a continuation of price acceptance in this price, I'm probably going to see pushing to that $55 region. A lot of analysts that I've spoken to and a lot of people that have gone on to many business talk shows, many things out there have basically said they know that there is an opportunity for a range between $45 and $55 a barrel. Obviously, people wanted to stay above 55, but US is going to try their best to keep it below 50 on the US crude. So this is all the information you need to digest. I think for all of you who would like to actually understand what I'm really talking about, all of the financial data and all of the information is in that previous video of talking about OPEC, so you can actually work out like where I'm getting my fundamentals from. But I really would like you to have a look at this as a very strong case study in terms of understanding exactly how the fundamentals are working out, because the thing is that right now the fundamentals on oil is very limited in a good sense. There's not too much running on the thing other than obviously the dynamics of geopolitics in terms of Venezuela and what they're going to do on oil sanctions, in terms of what's currently happening with companies from Saudi buying up American oil fields, then the production cuts, OPEC. So there's very limited fundamentals. And these are the things that you're going to need to understand. So I'd really like for you to have a look at it. Obviously, for me, if we see price rejection, I know what I'm going to do. Gonna get stopped out, really don't mind about that. I'm gonna re-enter on the position and try and see where the market is going to try and accept this number. Obviously, there's a lot of people that have missed this number. A lot of people might have not expected this. So we're obviously waiting for that. You're going to see a lot of people going into later today are going to start understanding what's happening, and they're obviously going to be entering. So a lot of the big players are going to be late to the game. But also another one that I wanted to show you is the technicals. So there are actually technicals showing up here. And obviously to some of you fundamental warriors who have been like, oh, this guy, you know, he trades nice fundamentals, and now I'm showing the technicals, you might want to switch off the video so you don't get pissed off with me. But look, we live in a world where technicals do sometimes work well. You know, some people don't call them resistance areas. Now it's the new word, I think, called swing high and swing low, where, you know, it could go to that region. It might pass, you know, that's just, you know, just really, you need to understand where price rejection areas truly live, and where people's stop losses actually are sitting. That's what it really is. It's not swing high and swing low. That's just a speculative word. But basically you can see here on the daily chart, we've got price moving upwards on this trend line. So obviously we've got a trend line here. Let me actually just extend it a bit. We've got a very strong trend line here. We had a very nice test over here, followed by a really nice test going into this region. And obviously, as you see here, we've had a very strong test in this region. Once again, we've also had a resistance region here. So we've had this resistance line. Obviously, depending on how I draw it, I can draw it on top of the wicks, which obviously pierces, the body pierced a bit today. I can draw it on top of the candles. You know, it depends on, it's a rough estimate for understanding where price is moving. And obviously we've got an upward trend line here as well. So we've pretty much got three trend lines crossing right at this point here. And obviously here, if we have a look, that's pretty much a bullish breakout if you see on that that level there. So if I just draw a sorry, I'm not very good at selecting. Oh goodness, I didn't want to do that. What did I just do? Oh, okay. Sorry, I'm still, I swear I've been trading for so long and I still don't know how to select these things properly. Okay, there we go. Okay, so we've got a bullish breakout here. Obviously you can see price tested this as a support. It tested it really nicely, and then we've got price going down into this region here. We had price test, perfect spinning top candle, price rejected, price came back up, rejected, price came back up, and broke out beautifully. So broke out on a daily candle, just kept on moving its way back up. Let me just really would like someone to design a phone that doesn't need a battery. Oh sure, we've got price rejecting quite heavily today on this candle. Okay, well, let's just talk about this. So obviously we had price coming up really well, then followed by a pullback on this breakout. So obviously we had a breakout of this upper resistance level. We had a breakout of this downward trend resistance line, and then we've sort of had a slight range here, sort of a bit of a bearish cloud cover. Price move right back down, has formed a bullish candle, and now price is opened back above on this daily candle. So that is what I'm basically looking at on the technicals. Obviously we can see here price is pulled back quite heavily. So if we have a look, you can see there's another candle coming out. So obviously, like I said to you, I'm pretty much just I'm not going to worry too much if this stop loss is hit, because I've got my trading plan in place. Obviously, if I was filled on my position, I'd be in a little bit less of a problem position. But I mean, it's going to be such a small loss if I do hit a stop loss, and you know, this is a very long-term position that I'm looking at. So basically, where I've got my stop loss, my take profit set right now is I've sort of got my take profit set in that sort of 53.50 region, sorry, 53.60 region. I really feel price could possibly move up to that region, and I think we're going to see a strong pullback on this level, followed by a bullish push. But obviously, another point that I do want to make clear on this technical barrier is, obviously, if we see price move back to this horizontal level, which could happen, obviously then on this horizontal level, I'll probably enter on a buy order. So what I'll probably have is a buy order right here with a very tight stop loss, and a buy order probably over here at this price rejection zone with a stop loss down here. But those will be on very small positions. And obviously then what I'll do is, as I see price confirming, that's when I enter my big orders. So obviously entering my smaller orders is obviously seeing where I can find a cushion in the market, and obviously where I'm seeing price move to stop. And then entering my strong buy orders is where I'm going to try and look for my serious profits. I'm going to try and look for hitting a home run if price does confirm really well. So if price confirms well, I'm going to go for that home run. If price doesn't confirm that well, and obviously a lot of the articles coming out and the talk of the town, and seeing how that goes, obviously we're going to see something happen. Yeah, we can see prices rejecting heavily. Yeah, so we've got a test back down at this resistance level. Price just keeps on moving back down. Sorry, I'm sort of trying to stretch this video out as much as possible so we can actually try and see. I've just got to run soon. So, okay, the last point, technical barrier, I'm also having a look at, which some of you might not like, but hey, it works for me sometimes. Obviously, on the stochastic here, we've had a very strong sell-off. We've got it in the oversold region. And what I do understand about the stochastic is, yes, time to time, it is a really nice opportunity to use. I've got someone that I know that trades just stochastics. I have no idea why. I'd never do it myself, but she seems to make a huge amount of money. And, I know she makes money. She used to be a student of mine. But she literally just trades stochastics, and she's just waiting for that oversold region that she can go bullish on, and just she holds it. She holds it for a long period of time. So obviously we've got that stochastic that's having a look at price sort of moving down into that region. But another one we've also got is on the daily, we've got price trying to move up into that region, which could be a possibility for price to try and move back up. But on the weekly, if you have a look, we are price overbought, which is obviously showing strong divergence. So obviously, if we see that either going into this week's candle, we're going to have a major pullback, and maybe next week's candle, we're going to have a strong open. But the biggest problem is, if I have a candle that's got some very big wicks on it, I'm going to be stopped out. So that's another thing that I might have a look at, and I might not consider too much. But we also have to consider the fact that this price is relatively oversold. But as an example, in this region, we had price oversold, followed by a 2-week pullback, and then a very strong move. So you can have price still stay in those bullish and bearish areas. But obviously, the only point of technical barrier that I don't like is the fact that we oversold on the daily, but we're overbought on the weekly. So obviously, that's something I don't like. On the 4-hourly, we overbought, so obviously we're going to probably move back down to that oversold region, which obviously means if we got price moving down here into this oversold region, let me actually enter a new order here. So I'm just going to basically do this because I really need to get running, but at least you can see where my buy order is going to be entered. So I'm going to have a look at speculating on a spot. $50.36, 50.367. Let's set the stop loss at 49.708, 49.708. This is Brent crude. Also a big one, please check your pending orders. Like, seriously, don't enter them and not look at them. Like, you have to look through. So what I do is I check symbol, okay, correct, Brent crude, volume size 0.10, perfect. Stop loss, we got it. Take profit, not gonna have to worry. It is a buy limit. The price is, oh, hang on, just give me a second. Yeah, we're gonna be wanting a buy limit. At price $50.36. Let's have a look. I know this is like crazy. Okay, $50.36 over there. Let's go. Let's do an expiry. I wanted to expire by tomorrow. So placed. Okay, so basically let's have a look. I'm just going to set it right here on the bottom of these wicks. So obviously if we see price reject, we're going to obviously not be too happy, but at the end of the day, it's not a train smash. It's not the end of the world. I'm probably going to set stop loss there, $3.77 profit. $3.77 loss, and 43 pips loss. So not too worried about that, but obviously I'm not entirely sure if price is going to pierce that region. Obviously, if price comes way back down into this region, that's going to be a completely different story. I'd probably enter on a much bigger buy order, which will obviously, because now, okay, so my stop loss is currently at, let me have a look. So my current stop loss is at, sorry, I'm just trying to check this on the daily to make sure I haven't moved it incorrectly. Okay, so my first order is at an $8.31 loss, probably going to be hit quite soon. Second order, $3.77 loss, which is a total of $10 loss. So today I'm already up $9.80, which means if both get hit, I'll be down $1 for the day, which is actually fine. But if price holds, I will make $21 on the first position. If I cut that, I'll make probably $30 on the second position, minus my loss of $8, $22 profit, net profit after the first order loss. If both orders lose, I'll be at a total of $10 loss on this position, which means the third position I'll enter at 0.1, and I'll enter at 0.40. So I'll enter at basically $4 a pip, technically speaking, but this position's not leveraged, so it's technically like 40 cents a pip. And then I will hold that to the upper region, which will probably push anything between $60 to $80 profit, with opportunity of a $20 loss. So at worst case scenario, I'll be at a total of either a $30 total net loss if I lose all three orders, or I'll be at a max total if I lose these two orders and make the third. I will be at a total of a net of, thinking to myself now, total net of anything between $60 to $70 profit, which is quite a good opportunity. So technically speaking, I've just done a little bit of quick calculation. That is a very good opportunity. So you can have a look at what I'm doing. Obviously, you're going to see this price play out. If I lose all three orders, not going to be the end of the world. I've done very well this month, and this week I've also been very happy. I've got some positions that are doing quite well on pound Japanese yen and euro pound as well. Euro pound stalling a bit. Pound Japanese yen is down a little bit today, but I think it's going to be pushing through for the rest of the day. So I've got two positions running that are in a relatively okay amount of profit. So putting a speculation out on this, because of the fundamentals, because of everything, I'm basically looking for where price wants to accept its region, because from what it looks now, price wants to reject. No one's going to answer. I love it when no one answers the phone. It's so fun. Anyway, I know where price is going to reject, and I've got my orders sitting there. So if price rejects to level 2, so I've identified rejection region 1 is where my first order is going to be. Rejection region 2 is going to be where my second order is going to be. and rejection region 3 is where my third order is going to be. So I've got 3 contingency plans, or should I say 2 contingency plans. The first plan, which is in play, doesn't work out, and then on top of it, I've obviously got where my stop losses need to be and where my take profits need to be. And the thing is that it's not written down. That's the other one. You know, I've just done this for you right now, and that's also what you need to make sure you understand, you rely on very heavily, is you need to do these calculations like that. You need to do them as fast as possible. You need to be able to do all these calculations very, very quickly, digest the information, and get your orders in, because that's how the market moves. Obviously, for me, I had a really bad order fill, which is going to be another one. I'll probably contact my brokerage, chat to them about slippage and problems with order fills, see if I can fix it in some way. And obviously, learning from that problem, I'm probably not going to put in a pending order again, trading on these positions and on this brokerage account. Not to say that there's anything wrong with this brokerage account. I've had lots of slippage on lots of accounts. There's nothing wrong with it. But obviously, I'm going to make sure I wait for price to digest into any of the regions, and then I enter my orders. So I could have been a little better on my order execution. And for my institutional account, I'll probably set some orders in the region of my I'll probably set orders in the region of my my third contingency plan, and maybe in my second contingency plan for a very small order, because I really don't want to go and lose lots of money on that account. Because, you know, for me, losing $10 is not the end of the world. Losing $1,000 or $2,000 is not fun. I don't like doing that. So in terms of what we've currently discussed, I'm just basically showing you a very transparent example of how you would trade something like the OPEC oil release and how it's working out. Obviously, right now, it's not working out perfectly. So, you know, at the end of the day, it happens. But what I'm basically doing is helping you digest this financial data and helping you come up with an understanding of how the market should really move. So we're probably going to see this order be cut. It's sort of piercing that $8 region now. So we're probably going to be going to contingency plan number 2. You can see price is like nearly there. It's actually quite interesting. I mean, this number came out incredibly good, and the market has completely rejected the price. Like, completely rejected the price. And that's actually pretty amazing to see, because, you know, I've had this before, and, you know, I had it a while ago and I got really badly nailed. And even though I came out in profit, I had to completely change the direction and short the market and go against all fundamentals. And that was really terrible to see. But, you know, at the end of the day, you get price that sometimes it will reject the technicals or it will reject the fundamentals, and you just got to play with it. You just got to play through it. So unfortunately, at the end of the day, that's just how price moves. But sure, I've actually got to get running soon. So basically, I'm just going to end off this video depending on how it plays out. Obviously, keep a close eye on my Twitter account as well. All of my trades from this retail account post out to the Twitter account, so you can actually see how these trades played out. You can see if I've lost, if I've won, and how well I actually did. So obviously, you can say I told you so if I lost the position, and you can be happy if I won it. So obviously, depending on which contingency plan gets hit, depending on how much profit I make, it's focusing on planning your trade, trading your plan, and getting back into the market every single day so you can do it again and again and again. Once again, everyone, if you want to find out more about what we do in our academy, I run an online training academy. I teach people how to trade, invest, manage their wealth. You are able to have a look on our website, msequitiestrading.com. If you are interested in training with us, you can see down below we have full academy access, over 50 hours worth of video content, 24 tests, sorry, not 24, it's a lot more. It's about 50 tests, assessments, and exercises. I like my tests and I like testing people, so we've put out a lot more tests, private coaching, mentorship programs included, as well as weekly trading plans. So you get all of the trading plans that I use every single week. It's a 12-month access $495 per person for 12 months. There is a scholarship, $175 for scholars. You have to be under the age of 25, please. That's just my mentorship programs for my scholar students. We run internships as well, so if you want to work for us, you can work for us as an intern. We do have an ambassadors program as well. You can click get started, come and work with us, spend some time. We're quite a nice team. I'm sure you'll enjoy being around. So once again, everyone, oh yes, one last point. We train students in over 25 different countries. So wherever you are in the world watching this video, we can help you. We run everything online through an online training academy and private coaching, so we can train you no matter where you are. So once again, everyone, hopefully we hit some good plans here. The plan's not going very well right now, but hopefully we're going to play it out. There we go. So we've just hit the stop loss over there, and price is continuing to move down. Okay, so we basically got price wanting to move back down to this region. So I've hit a loss. So now we're on to contingency plan number 2. And then we're going to basically see if I was right, if I was wrong, and what we're going to do. So hopefully we're going to be right. Hopefully we're going to be wrong. Not going to be wrong. But depending on how it plays out, we're going to see what happens. So once again, everyone, hope you have an awesome day of trading. And I'll make sure to see you in the next video. Cheers for now.